Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney, and it's good to be with you as always. Today's topic is your employer is not neutral when they promote their group long-term disability policy. And I have this discussion regularly with clients as they progress in their career and expand their private specialty disability coverage. I work with physicians across the country, usually start working with them when they're in training, and then as they become attendings and want to increase their coverage, there's a formula that companies use to calculate how much insurance they can buy. And it incorporates their pre-tax earned income or salary plus bonus after it's earned and production once they're in production mode from a pay standpoint. The other aspect of the formula is a percentage of their group long-term disability policy through their employer. And I've had other episodes, and most clients are at least aware of the gaps or at least that they're aware that there are some gaps in employer group long-term disability policies. Even if they use the same own occupation definition or wording, it's not the same definition. It's the same language or similar language, but how they define that is dramatically different than how their private specialty coverage defines it. And so most clients want to maximize their private insurance in order to make sure that if they are disabled, it just kind of locks in a higher benefit that they can expect to receive. Our clients on claim all collect from their private insurance, but a lot of them never get any money from their employer policy because they don't meet the threshold for being disabled enough. And that's routine. It doesn't matter who the employer is. And so it's not the employer's fault that the group long-term disability policy has these gaps. But what is on the employer is promoting their benefit package to you as a physician, to entice you to work with them, to make sure you understand how benevolent they are, how good they are to their employees. They promote their benefits, and they should. I mean, number one, you should be aware of them. Number two, it's okay for them because they aren't free. There is a cost to them. And so they want to make sure you understand what that cost is and what it's getting you. And so the promotional pieces, and I'm not sure who approves this in the insurance world, okay? But the promotional pieces that they get from the group long-term disability provider often is designed to enhance or cause you to opt in or want to be in this group policy and see it as a benefit. Unfortunately, the gaps in the definitions are there, whether that slick marketing piece is included or not. It does not matter who the employer is. If adverse selection is involved, which is in group long-term disability policies where an employer has to cover everybody, that policy has to cover the least healthy employee as well as the healthiest employee. Insurance companies are gonna offset the risk of that adverse selection. And the way they, at least as of now, the way they do that is by watering down the definitions. And they'll call it own occupation, but how they define that is not if you can't do your specialty, you get your benefit, and then you can go teach and make an unlimited income and there's no penalty to your benefit. That's the true specialty private disability insurance definition that we help our clients get. That's not the definition in the employer group policy. Nowhere close, okay? Also, the private disability policies, if they're done correctly, would include a long-term recovery benefit that pays if you medically recover from a disability and go back to work, but when you go back to work, your income does not recover. And that's vital. I've never read a group policy that includes a recovery benefit. It's not going to be there. And so the gaps are significant in these policies, but you need to understand that just because they're promoted, just because there's a marketing piece or a PDF that they email you that looks really good, it's enticing on paper. Hey, they're going to cover 60% of your income up to $20,000 a month or up to $15,000 a month. I do think there are people that forego their private insurance because they read that and they've been told by the benefits person that that's adequate. And that's very unfortunate. The benefits people are basically just repeating what they've been told by whoever the group LTD policy broker is, has told them. So they don't know dramatically more than you do, if any more than you do. They certainly very likely have never read the policy. And so you want to look at the contract. I can tell you what it's going to say. It's not going to have the true specialty definition that's in your private insurance. It's not going to contain the recovery benefit. If you want to find your policy, get the full contract and send it to me, I would be happy to show you where it says this or where these things would be if they were included. These details are really important. And it's just important for you to understand that your employer is not neutral. Okay. And I don't mean that they're out to get you. That's not what I'm saying. I'm just saying they need to promote the benefit that they're paying for you. It's important for you to understand that it's ultimately buyer beware. It's up to you to make sure that your family has the coverage that you expect them to have and that you need if you can't do your specialty. It's just vital to make sure these details are covered. I would be happy to discuss this with you further in more detail. Please feel free to reach out with questions about your situation. 704-270-2376. Text me 704-270-2376, and we'd be happy to schedule a time to chat. Thank you for your time as always. Grateful for that. Look forward to seeing you on our next episode.
Thanks for listening to the Cover Your Assets podcast, a Work P2P production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.